arrange for finances. So from where will you be arranging finance? Definitely you must be having your own capital. If you do not have capital of your own, you will be approaching to your friends, your relatives, your family members. And if your family members, your relatives and your friends are not able to provide adequate capital, adequate amount of money that is required to run a business, definitely you will move towards some of the financial institutions for getting money. Now, today in this class, we will be discussing about what are the different types of financial institutions and what is their role in development of entrepreneurship in any region. So first of all, what is financial institution? Financial institution is a company engaged in the business of dealing with financial and monetary transactions such as deposits, loans, investment and currency exchange. Okay, so the things are very clear. Financial institution is a company like any other company, like Tata Steel is a company, Infosys is a company, Wipro is a company. A financial institution is also a company, but it is engaged in the business of finance. What kind of finance? What is a business of finance? Any business where the involvement of financial and monetary transactions are there, such as deposit or loan or investment or currency exchange. Okay, like bank is accepting deposit, bank is giving loan, bank sometimes is making investment, or if you want to make investment, there are some other companies like mutual fund companies, some private equity firms are there, they are dealing with the investment. Currency exchange, sometimes bank is doing this currency exchange, some specialized agencies are also there which are doing this currency exchange. Like if you want to buy dollar or pound or euro, then there are some specific companies which are actually doing this job of currency exchange. Now, what are the different types of financial institutions? We'll just look it. First type of financial institution is a development financial institution. Now, what is development financial institution? By name itself, it is a development financial institution. Financial institutions, we have already known that financial institutions are companies engaged in the business of financial and monetary transactions such as deposits and loans and investment, etc. But what development? It means these kind of financial institutions will provide money or will be engaged in the business of development. Okay, like suppose some infrastructure project has to be constructed, some bridge has to be constructed, some new industrial and unit has to be constructed, new company has to be erected, a greenfield project has to be there, turnkey project has to be erected. So for this, development financial institution will provide money. Some of the examples of development financial institutions like Asian Development Bank or NABARD or IIC or Industrial Development Bank or IDBI, these are, or in the International Monetary Fund, they are some of the examples of development bank. Now, commercial bank also gives loan for business. Development bank also gives loan for business. But what is the difference? Commercial bank normally gives money for short-term purpose, for short-term tenure. But development financial institution, DFI, they provide money relatively for a longer period. Suppose your gestation period is 20 years, 30 years, 15 years. Then definitely a commercial bank whose horizon is only 5 years or 6 years, definitely they will be reluctant in providing money for that longer time duration. Okay? For example, suppose a hydropower project has to be constructed, and normally to construct one hydropower project the time required is 10 to 15 years. Means up till 15 years there will not be a single penny earned from that hydropower project. So if you will not be earning anything, and up till 15 years you have to just keep on lending. So this amount, this kind of strong financial muscle is normally not seen with the commercial bank. What is commercial bank? I will come to that later on, but it is only with the development financial institutions. Development financial institution will not give you educational loan. Development financial institution will not give you personal loan. They will not give you car loan. They will not give you most of the time housing loan or any consumption expenditure loan for the marriage of your daughter or sister or your own marriage. Okay, they will provide loan only for some new thing is coming out, some big industrial innovative things are coming out, and for that purpose only these development financial institutions are giving loan, say for construction of a factory, some road, bridge, new infrastructure project. Okay, like Power Finance Corporation, this is one development financial institution of Government of India. So this Power Finance institution, it provides money only for the only to the power sector companies for construction of units related to the generation of power. Okay, suppose someone wants to establish or set up a power company, say thermal power, कोयला से बिजली बनाएंगे, so उसके लिए बहुत पैसा चाहिए. So who will provide money for that? It's the Power Finance Corporation. Next is the commercial bank. Commercial bank, normally the banks that you are seeing like State Bank of India, UCO Bank, Central Bank, Indian Overseas Bank, Allahabad Bank, Indian Bank, Vijaya Bank or Bank of Baroda, all UCO Bank, ICICI Bank, Yes Bank, all these are the commercial bank. So commercial banks are actually multi-purpose banks which actually deals with all kind of banking functions. And what is bank? Accepting deposit with a purpose of lending and along with providing some other ancillary banking services like exchange, remittance, collaterals, advancing loan, taking collateral security, all these things are. And this for commercial bank there is one regulator, it is the RBI, Reserve Bank of India in India, or other than India there are some regulators, it may be called by the different name, like in USA it is the FBI, Federal Bureau of FBI, FBI, yes, in USA. Similarly in other countries there are different regulators, normally they are known as the central bank of that country. So commercial banks, they also provide loan, but what is the difference between development bank and commercial bank? Commercial bank provide loan for short duration, 2-3 years, 4 years, or for a relatively medium term loan only. They normally do not provide long term loan or bigger amount. Okay, if very big amount is required, suppose someone wants to construct a new industry at all, new industrial outfit, then for that actually a lot of money will be required, and for that one have to approach this development bank. Commercial bank will not be suitable for that. But suppose someone is having their business and they need say working capital loan, or they need some just for a small expansion purpose only, some loan is required, so commercial bank is most suitable for that, or small capital, commercial bank. And the third kind of financing institution is the insurance companies. So normally insurance companies, what their job is to protect the subject matter which has been insured in a consideration for which is called premium. So they accept premium, and for that they normally provide protection to the subject matter, whatever is being subject matter. It may be life, it may be non-life. For they normally used to provide security against an anticipated or a probable future loss. Okay, so that is insurance company. And insurance company, there are different kind of financial institutions, and insurance company also sometimes provide capital for the setting up new enterprises, not directly, but normally the premium that is being collected by the insurance companies, they are also invested in some other corporates, in the securities, equity shares, or the bonds or debentures of some other companies. So insurance companies is collecting money from us, and they are actually advancing money to the big corporates for doing business. So insurance companies are also one kind of financial institutions which is important in any financial system. And the fourth kind of financial institution is the NBFCs. NBFCs, the full form is non-banking financial corporations. Now commercial banks are the banks, and other than the commercial banks, actually they are the full-fledged bank. They provide all kind of banking facilities to their customers. But the NBFCs, they provide a tailor-made financial services to their customers. Like DHFL, they provide housing loan. L&T Finance, they provide vehicle loan. Muthoot Group, normally they provide this gold loan. Bajaj Finance are normally credit card. Capital HDFC Rate, Mannapuram gold loan. Edelweiss Financial Services, they just provide loan. But like if you want to open a savings account in Muthoot Finance or L&T Finance, you cannot. If you want to avail a credit card facility, you can get it from Bajaj Finance, but definitely will not get a facility of opening a savings bank account or a term loan in Bajaj Finance. So this NBFCs, they provide a very tailor-made specific services to their customers. Normally they deal in only one or two services, and they provide only these two services, one or two services to their customers, and they are specialized in that, and they normally provide these tailor-made services. Like if you want to have a vehicle finance, you can go to the L&T Finance. They will provide money. They have all the schemes ready. Just you have to submit the document and you can get a car loan or vehicle loan from the L&T Finance. But if you want to have a housing loan from the L&T Finance, definitely they will not give. But similarly, DHFL, they will provide you housing loan. Their entire scheme is ready. Simply you have to go and they will be giving you the entire housing loan. But if you want to have like credit card, definitely housing DHFL, they will not give. So this is how NBFCs are different than that of others. So mutual funds are also NBFCs, venture capital funds are also NBFCs. Any other kind of financial institutions which are not falling within the first three, that is the development bank, commercial bank, and insurance companies, they are normally clubbed under the heading of NBFCs. So these are the four basic financial institutions that are there in any financial system, and these provide a strong support to the entrepreneurial growth in the region. So this is about